Hi, I'm John Kliewer, partner and senior financial advisor at Beyond Wealth Advisors. With me today is Dennis Bacon, Chief Investment Officer, partner, Beyond Wealth Advisors. We're back again for another year. This is our January 2021 economic update. 2020 was quite the year. I don't know if we're in store for more of the same or more different, but let's start it off. What do you see the economy doing in 2021?
Well, you're right. We're all glad to have 2020 behind us. We got that. I think over the next year, I would expect by the end of the year, we're going to have much more of a normalized economy. I would expect, though, for the first half of the year, it's going to be pretty choppy until the COVID vaccines have fully rolled out. You know, we have a substantial amount of the population, feels comfortable on getting out and doing things. I think it's going to be that time. But once that happens, and I expect late spring, early summer, rolling into fall, you have a ton of pent-up demand among the consumers. And not only that, people have not been spending money as robustly during COVID as they were before. And the personal savings rate were astounding for last year.
Absolutely.
So we do expect there to be a lot of spending, which creates a good economy, and so we expect that to be pretty robust and pretty dramatic, actually, when it happens. But by the fourth quarter, we think things will become a little bit more stable, a little bit more normal. That pent-up demand will have rolled through once we get through the Christmas season. We would expect that to be pretty stable and look at a good growth going forward. Matter of fact, we're probably expecting a GDP growth of in excess of 4% this next year.
Oh,
so
that's fantastic.
Should be excellent.
Well, speaking of market expectation, we do see just powerful earnings growth this year. Some estimates putting the S&P as high as 4,000, maybe even 4,500, which would be fantastic, of course. We're also looking at some areas that maybe underperformed in 2020, small cap, value side of the house. Also maybe outperforming, maybe being even a little bit more robust than they were in 2020. And then there's this whole thing of energy. What would be just a high-level expectation for energy going forward?
Well, I think in the energy area, you have two components of it. First off is the renewable energy. That's going to continue to expand over the next several years. But for 2021, we really expect to see, some people are saying, the most robust recovery in the energy field since 1973 when we had the oil embargo. So we do look at the high potential as this pent-up demand comes out, as people start traveling and doing things and hopefully having a more normal summer, that the energy consumption will be exceptionally high, and not only in the U.S. but also internationally. So we do look for good things. It's going to be very dicey, but we do feel like that ultimately by the end of the year we'll see a substantial recovery in that sector.
I think we're all figuring out what normal really means again, perhaps.
Yeah, I'm not sure.
So, all right, let's maybe something a little more challenging. You want to talk about fixed income?
Yeah, fixed income is kind of an interesting area. Typically, it's been that area where we got some income and we, had stability in your portfolio. Well, right now with interest rates the way they are, we don't expect to see income. It's virtually none, a few areas here and there. But the biggest challenge is as the economy picks up, we're going to see some inflation. Not 1970s type inflation, but we're going to see some inflation. That's going to push the long end of the bond market, those bonds that are 7, 8, 10, 15, 20, 30-year bonds. That's going to push the value of those down, which means there's a lot of risk in that area. Because the Fed is going to keep the low end, the short end of the rates down, which is what they control. As a result, we do see some risk in the bond market going forward, but really need to stay on the short end of the market, maybe the high quality side of the market. Probably the one area we see some opportunity is in floating rate funds, which is a small sector of the market, but has a little higher yield than high quality bonds, but the duration, the time, the bonds period is very, very short. And so we do see some opportunities in that area. Otherwise, bonds are just to hold your value.
Right. So maybe in summary, shorter term, higher quality.
Correct.
Going forward.
Right.
All right. Let's. We've been talking about the U.S. quite a bit. Let's switch over to the international markets.
Okay.
Obviously, a lot going on there as well. Where do you see the international markets playing out going forward?
Well, in general, we're probably a little bit underweight international versus where we were 3 or 4 years ago.
Sure.
But and Europe presents a lot of challenges. Most of their economy, the investments you would do there, really center around the financial areas, and they have a lot of challenges. So while we don't feel like it's going to be bad there, it certainly doesn't provide the opportunities you're going to have in other areas. Right. Where we see a lot of opportunity is in the emerging market areas. Sure. They will be able to take advantage of a weakening dollar, not dramatically, but we should have a weaker dollar. That really buoys those economies. And those economies are much more dynamic and able to shift gears and shift modes much quicker than what a developed country like Europe would be able to do. So we see a lot of opportunity in the emerging markets, both on the equity side and on the emerging market debt side. Both of those should be excellent for this next year.
Fantastic. I'm sure we'll have more dialogue about that in coming economic updates. Right. All right, one last topic. Okay. Obviously, we've been dealing with the COVID pandemic through the last year. And while that has presented a lot of challenges, there's actually some opportunities that have come out of that as well. Anything particular that stands out to you as we think about going forward, what that might present?
Well, probably the first thing that's most obvious to everybody is the acceleration of the transition to 5G technology, which gives everything faster, quicker, and more robust from a processing standpoint. With people working out of the office and those things becomes much more important. That speed becomes more important. Right. So that's a big change. That it pushed something, we were headed that way, but it pushed it forward much faster.
Accelerated it.
Accelerated it a lot.
Yeah, I know we've also heard a lot about this difference between stay-at-home companies and not stay-at-home companies, basically. And so I'm thinking of like Zoom. You know, people started Zooming this last year, and what that's meant for the opportunities that's presented companies in terms of how they do business. And I know that's another area that for some companies they've been able to take advantage of and really position themselves in the marketplace in ways that they weren't able to previously because of what the pandemic has offered. Anything else that kind of wrap up that section?
Well, I think the biggest thing is we're going to see some tremendous opportunities because people are doing life, air quotes, doing life different, because we've learned some things that we can do, much like the stay-at-home business economy. We're going to have some reductions in the need for office. So there could be some challenges in there. That's not been predicted, but it looks like there could be some there. The biggest thing is just how we do life. And I think that's been a big change. But that presents, from a business standpoint, it presents a lot of new opportunities for new startup businesses to expand into areas that they maybe hadn't thought of before. Absolutely. So I think in every difficult time, there's always some opportunities. And I think what we're going to find out over the next 12 to 24 months are those companies who really took hold of those opportunities as a result of COVID and expanded upon them and enhanced their base while enhancing our lifestyle.
Absolutely. All right. Well, with that, we're going to wrap up our January economic update. Hopefully you got the sense of the opportunistic and opportunities that we see going forward, not only in the market and the economy, but also just in the opportunity to serve each of you. We look forward to seeing you back next month, and that's all for now.
Thank y'all.